Hey traders, Nick Shane here looking at SBUX, specifically to the stock itself, but also to decision-making process when we're dealing with a momentum stock. So SBUX has had a tremendous rally from the point of control, so as much as 50% almost. I thought it was strange, didn't know exactly what it was running on. I don't think it's cheap anymore. I want to say PE perspective for what it was, 32 PE, so it's pretty steep. 4.4 times sales. That's more expensive than Amazon on the number of folds over sales. So looking at this chart, I noted before that there was a tight range, consolidated well, and that gives the bulls hope because they're setting a base for a breakout. To me, I saw two zones, and the breach of either sides was going to carry in one direction or another. The upside did not come, and the downside first leg is priced. So what do I do now? Do I bail? Do I not bail? So just from the daily chart, this is a daily chart, I can tell a few things. So let me go grab a scratch pad. Okay, snipping tool. There's a new one in Windows. Doesn't work very well for me yet. Anyway, so we're sticking with the old one. All right, so this was important, and they made the stand. That doesn't mean they're out of the woods. So if they do this, and you see my little first leg priced in this red thing here, and they lose it on the second, this will come, because now it looks like some sort of a head and shoulder. My bottom line is it's a neckline that fails, and when it fails, they extend lower. By how much? If you draw it perfectly, it's about this much lower. So is that where it's going? Not in a straight line, because I would guess that there was going to be a fight right here. So now the line makes sense how I drew it, right? I don't remember exactly how I drew it, but it works out. Another line that sticks out is right here. So if I was looking for two targets on this breakdown, this would be the first primary target, and then depends what happens here. This would be the second if they want to take it down. I find it hard to believe that if the markets are rallying, this will happen, but it could. All right, so can I get more intelligence? Sure, this is a daily chart. It's always good to delve into it. And I start slicing. Let me see, 120. This is a 2-hour chart. Let's go to 60. Go to 15. Okay, so now we have more immediate information. I'm going to move this. Same company, same chart. I'm going to have to mark it up again. Now we're looking at every candle 15 minutes. So a little faster decision-making process, but it gives us a plan of action. So I look at this candle, sticks out. So I have an edge here and an edge here. This is pretty close to that edge. Okay, so now immediately I see that this is not a coincidence. Right, big candle here. Whatever happened here, they wanted to happen here. So somebody big got screwed here, and they trued it up here. That's my guess. So this level is important on the way up. This is a secondary level, which is probably more important from control perspective for me. So I'm going to call it 91, pretty close. And above it, then the buyers are in control. They've maintained a higher low trend, and they crossed an important trough to my eye. So let me extend it left and look at where that coincides. I didn't plan it that way, but it's that boom secondary effort to hold, and it failed. That's why it's important. So this is a ledge, this is a ledge. Scene of an accident. Boom, failed. Will they get it right this time? And my stop out, if I got long here, my stop outs would be whichever points up here that make me nervous. But for now, it's higher lows, attacking a neckline, trying to recover ledge 1 and ledge 2. So that would be the plan of action. If I'm long, I stay long to see what happens at fight 1 and fight 2. The idea is this looks like an inverse head and shoulder of sorts, and the neckline is right here. So if they do break above it, they're going to extend this up. But I don't think it'll be a straight shot. They're going to stall right here, most likely. But this was a fast candle, and I don't know what there was a headline or what, but whatever it is, that's it was significant. And valuation here, I mean, this is a short-term plan of action for somebody who's nervous about their position. But if I'm nervous and I don't know this stuff, I'm just hoping and I'm flying by the feeling. Like if I'm feeling FOMO, the fear of missing out as it's rallying, oh my God, I closed my position, I need to rebuy, and then I rebuy here and it fails and it goes red again. Oh my God, I made a mistake, let me get out again, I don't want to. You see what I mean? So if I know the levels, I probably will react less and will make fewer mistakes. We all make mistakes, but with information and knowing which levels matter. That's why I say watch levels, not ticks. So if I'm watching ticks, if I'm watching this tick here and this tick here, and if I finally decide to buy it and then I get 2 red ticks and then I get stopped out. So if I knew that this was here, this tick right there, I wouldn't buy it here. I would wait to see them breach over it. See, now we're getting minute, but this works on every price level, every time frame, I should say. So let me go back to daily and see if I can prove it. Ooh, messed it up. Trading view, you need to fix it. You need to give us a reset button. Okay, so this is a daily. So if I start shorting right here, I made a mistake. Why? Because this was the place where they last bounced. If I exit my long right here, I made a mistake. Because if I was long here and I waited down to here to exit, I should have waited a few more ticks to see what happens, because this was clearly a place they bounced from before. That's just one example of why I need to know levels. And that's all I need to say about this. This was SBUX. Subscribe to the channel, YouTube, it's free. It should pop up on your screen here somewhere.